Have you ever wondered why the wealthy don't keep their money in the bank? They understand that the security of their assets doesn't always come from depositing money into a savings account. In fact, there are far stronger assets that help protect and increase your wealth, even as the financial world evolves every single day. These 7 assets not only offer more security than cash, but they also serve as a path toward true financial freedom. Are you ready to uncover this secret? Keep watching this video to discover how these assets can transform your life. Do you still trust banks completely in 2025? I know that's a question that might make many people uncomfortable. But let's be honest, if the collapse of Silicon Valley Bank in under 48 hours didn't make you wake up, perhaps you don't fully grasp what's happening right now. Thousands of customers, including businesses worth hundreds of millions of dollars, had their accounts frozen, unable to withdraw a single dime. No warning, no time to prepare. In a single afternoon, one of the biggest banks serving Silicon Valley's tech sector vanished from the financial map. I once believed that the money in my bank account was completely safe. Like many others, I thought, if the money's in the bank, I can sleep soundly. But the reality? Money doesn't sleep. It's quietly evaporating. And this, right here, is the most dangerous trap of our time, a trap disguised by false security. Keeping all your assets in the bank might just be the biggest financial mistake I and possibly you are making. Why? Because while you think your money is being protected, here's what's really happening. Inflation is silently eating away at every dollar you have. A loaf of bread that cost $2 yesterday might cost $2.50 today, and there's nothing you can do about it. Political decisions, things you can't control, have the power to decide whether your bank survives or collapses. And the most ironic part? The interest rates from banks are so low, they're even less than parking fees at a mall in New York. I'm not saying this to spread fear. I'm saying this because I want us to wake up. Do you remember when Warren Buffett said, "Do not save what is left after spending. Spend what is left after saving. But more importantly, let your money work for you. Don't let it sit idle and slowly die in a cold account." Ray Dalio's story is another vivid example. After the 2008 financial crisis, he warned, "Cash is trash if you don't know how to invest." And he was right. From real estate to gold, from stocks to investment funds, every asset can protect you from the devaluation of currency if you know how to use them. The problem isn't that we don't have money. The problem is we don't know where to put it. So, I'm going to ask you another question, one that I hope you'll truly think about. If tomorrow morning you log into your bank account and discover the balance is $0, what will you do? I know what you're thinking. A bank collapse doesn't happen all the time. But here's the thing, we're living in a time where the impossible is happening every day. Inflation is no longer a theory. It's creeping into every bill, every store, every trip to the market. I vividly remember the shock I felt when I saw the price of a carton of eggs double in just a few months. And I'm not exaggerating. The financial world is more unstable than ever. In recent years, the Federal Reserve has raised interest rates at the fastest pace since the 1980s, almost as if they were trying to put out a fire they themselves started. They're raising rates to control inflation, but this has been suffocating small businesses, making it impossible for many people to buy homes, and as we've seen, causing banks to collapse. Silicon Valley Bank was just one link in a chain of failures. And you know what's the scariest part? All of this is happening while the US economy hasn't even officially entered a recession. I've seen this pattern before. When I was younger, my parents lost nearly all their savings due to an unexpected crisis. They didn't invest. They didn't splurge. They just kept their money in the bank and trusted everything would be okay. But times have changed. Like billionaire Howard Marks, founder of Oaktree Capital, once said, "You can't predict, you can prepare." And preparing now is not a matter of choice, it's a necessity. When I look around, I see the clear signs. Large retail chains like Bed Bath & Beyond going bankrupt. Tech companies laying off tens of thousands of employees. Commercial real estate in a state of clinical death. And at the same time, prices are soaring while wages aren't keeping up. If you're living off a fixed salary and you think keeping money in the bank is safe, let me remind you of this. You're running a race where the finish line keeps moving farther away, and your shoes are slowly wearing out with each step. I'm not saying this to scare you, I'm saying it to wake you up. Wake up before it's too late. Wake up so you won't regret it when the opportunity passes by. And wake up to realize that your financial power doesn't lie in your bank balance, it lies in the decisions you make today. I used to think that just keeping money in the bank was safe. That was the belief my parents passed down to me, a kind of peace of mind that seemed unshakable. But now, when I look at the reality, I'm forced to confront a difficult question. What is my money doing in the bank? The answer is not a pleasant one. Inflation in the US is currently at 2.8%. That means every year, if you leave $100,000 in your account, you're losing almost $3,000 simply due to reduced purchasing power. The ironic part is the bank isn't paying you interest to make up for that. The Fed's base interest rate has surpassed 4.25%, causing borrowing costs to skyrocket. Small businesses are paying more to access capital. Home buyers are paying more for their mortgages, and IU depositors are seeing virtually no benefits at all. I remember when Warren Buffett said, "Risk comes from not knowing what you're doing." And he's absolutely right. We don't always realize it, but simply leaving money in the bank is, in itself, a risky move. Not just because inflation is eating away at every dollar, but because of the looming risks in the financial system, which is as unstable as a candle flickering in the wind. Look at what's happened recently. After the collapse of Silicon Valley Bank, trust in the banking system began to fracture. Just one rumor on social media could prompt a mass exodus of withdrawals, and an entire bank could collapse in less than 48 hours. Trust, once shaken, crumbles faster than the speed of the internet. Do you remember the Credit Suisse scandal? A name that was once synonymous with stability for Swiss banks. Yet it too was ultimately dissolved and merged. What does that tell you? No one is too big to fall. And we're living in a world where economic policies change every week. Tariffs can spring up at any moment, causing commodity prices to rise and putting immense pressure on inflation to surge again. I used to think that just working hard and saving was enough. But you know what? Those days are gone. Saving alone is no longer enough to protect you from the financial storm brewing out there. I think back to a real-life example. Ray Dalio, the founder of Bridgewater, one of the largest hedge funds in the world, once warned, "Cash is trash." It sounds shocking, doesn't it? But if you leave your money in the bank with interest rates that don't even offset inflation, you're essentially letting your money sleep and slowly lose value with each passing moment. And worse, it doesn't just lose value, it doesn't earn anything. It doesn't work for you. It isn't reinvested to create value. It doesn't help you escape the vicious cycle of economic instability. And the final, and perhaps most crucial, thing is that your money is exposed to systemic risk. Even if you trust the bank, you have no control over the entire chain of events. One broken link, and the whole system could collapse. I'm not saying this to make you panic. I'm saying this to wake you up, to help you look at your money, not with pride, but with clarity. You need to ask yourself a very serious question right now. What is my money doing in the bank? It's losing value every day. It's almost earning nothing, and it could be swept away by any undercurrent in the global financial system. So if it's not the bank, then what? If I don't want to sit back and watch my assets dwindle, I need to change direction. I need to learn how to make my money work for me, not just sit there waiting to lose value. And that's why I started looking into 7 types of assets that can replace the bank, new avenues that help preserve value, generate passive income, and build true financial security. Let's explore them together. When I first embarked on my journey to find alternatives to traditional banking, I didn't expect to find a perfect solution. But there was one thing I knew for certain. If I continued to let my money sit idle in the bank, I was slowly allowing my wealth to erode day by day. It wasn't just the devaluation of the currency, it was the loss of opportunity, the loss of control, and most importantly, the loss of agency. That's when I stumbled upon my first alternative US Treasury bonds. You might think that sounds dry, unappealing, but sometimes the things that seem boring are the very ones that help us survive when everything else falls apart. Treasury bonds aren't a lottery ticket, but they are a fortress standing strong amidst the financial storm. With an annual yield of over 4% and virtually no risk, Treasury bonds offer something that many investors today are desperately seeking: stability. While the stock market can swing wildly and cryptocurrencies are full of volatility, government bonds provide a place where you can relax, catch your breath, and not wake up in the middle of the night to check your account balance. When crises hit, like the COVID-19 pandemic or the sudden collapse of Silicon Valley Bank in 2023, people flocked to buy treasury bonds like they were life rafts in a stormy sea. They are seen as a safe haven, a secure place for your money. Veteran investors like Warren Buffett and Ray Dalio never underestimate this asset. They don't put all their eggs in one basket, but they always allocate a portion of their portfolio to anchor in a safe place. And that place is treasury bonds. You might think buying bonds must be complicated, but in reality, it's as easy as a click of the mouse. You just need to visit platforms like treasurydirect.gov, Fidelity, or Vanguard, names familiar to anyone who invests in the US. It only takes a few minutes to sign up, choose your desired term, from 1 year to 30 years, and that's it. No advanced financial skills required. No need to study candlestick charts or technical analysis. All it takes is one thing: faith in disciplined asset protection. I believe this type of asset is ideal for those who dislike blind risk. Those who understand that in investing, it's not about who wins the most, but who can avoid the catastrophic losses. I remember the words of Howard Marks, the legendary investor of Oaktree Capital. You don't need to always win big. The important thing is to avoid losing big. And treasury bonds are the tool that allows me to practice that. Make no mistake, this is not where you get rich overnight, but it is where you don't lose your wealth overnight. When bank interest rates fail to keep up with inflation, when trust in the banking system wavers, an asset like treasury bonds becomes a wise choice. I've seen too many people leave all their wealth in the bank, only to be shocked when everything is frozen, withdrawals are restricted, or simply, their money loses value every single day. That's why I decided to take action. Not all in. I only allocated about 20% of my portfolio to bonds. But it was this portion that allowed me to remain calm, to keep my reinvestment opportunities open while others panicked. It's the safety cushion that lets me take bigger risks in other areas. Just like how successful entrepreneurs like Jeff Bezos have said, I take big risks, but I never lose control of my personal finances. Treasury bonds are the tool that helps me maintain that control. For me, bonds aren't an offensive weapon. They're a defensive shield. But in an age where risks come from everywhere, from banks, geopolitics, to global crises, a solid shield is worth more than a sharp sword. And that's why I started here. But this is just the beginning. The journey to find alternatives to the bank is long. And I won't stop at just safety, because once I've built a fortress to protect myself, I will step outside to fight, to ensure my money not only survives, but grows. So now, join me as we explore the second alternative asset, where opportunities begin to bloom and value can increase faster than any bank account could ever offer. When I had established a solid financial foundation with treasury bonds, helping me maintain stability amidst uncertainty, I knew it was time to take the next step. I couldn't just hold on to cash forever. I needed to make my money start working for me. That's when I turned to a tangible, understandable, and long-term asset: real estate. Real estate, to me, isn't just bricks and land. It's a tangible asset, something you can see, touch, and, more importantly, extract value from every day. As inflation makes everything more expensive, from your morning coffee to your utility bills, a rental property brings in a steady cash flow. It's like a silent money-making machine, day in and day out. I started paying closer attention to the market. In fast-growing cities like Austin, Texas, or Nashville, Tennessee, home prices had risen more than 40% in just 3 years. This rapid growth wasn't by chance. It was a result of a migration wave from major cities like San Francisco and New York, where the cost of living had become unbearable. People were moving to cities with good quality of life and abundant job opportunities. And as the people poured in, real estate values followed suit, rising day by day. I thought of a familiar example: Barbara Corcoran, the famous entrepreneur from Shark Tank. She started with a small loan and gradually built a real estate empire worth hundreds of millions of dollars. She didn't start with a penthouse in Manhattan, but with old buildings, renovating them and renting them out. Real estate is the best way to become rich slowly, she once said. And I agree. Wealth doesn't need to come quickly. It just needs to follow the right path for long enough. However, I wasn't deluded. Real estate isn't a paradise. I had to learn how to face very real challenges. Unexpected repair costs, rising property taxes, and the worry of a vacant rental property with no tenants. I once thought a rental apartment was the perfect passive income until I had to personally call a repairman to fix the air conditioner in the middle of a sweltering July. These are lessons that you won't find in books, but they are invaluable. That's why I didn't rush to pour all my capital into traditional real estate. I wanted to diversify the risk, and REITs, real estate investment trusts, became an ideal option. REITs are a form of indirect real estate investment. You don't own the property, but you own shares in a company that specializes in investing in and managing real estate. With a small amount of money, I could invest in office buildings, shopping malls, or high-end residential complexes without worrying about plumbing issues or tenants skipping rent payments. I chose REITs because they are flexible and accessible. With just a few $100s, I could participate in the market compared to needing hundreds of thousands to actually buy a property. And while I wasn't a landlord, I still received regular dividends, like collecting rent each month. It was a smart, efficient way to invest, ideal for those who want to grow their money without taking on all the responsibilities of property ownership. I remember hearing Warren Buffett once say, "If you don't find a way to make money while you sleep, you will work until you die." And real estate, whether it's physical property or REITs, was my way of making money, even while I slept. However, I also understood that location was critical. Not every property is worth buying. Not every REIT is worth investing in. I had to learn how to evaluate areas. Is the population growing? Are there schools, hospitals, and convenient transportation? I also had to understand which types of properties were in demand: single-family homes, apartments, or industrial real estate. Pick the wrong location, and you could own an asset that no one wants. But pick the right one, and not only will you have stable cash flow, but the property value will appreciate over time. That's why investors like Grant Cardone, who owns billions in real estate, always say, location is everything. For me, real estate is a long-term commitment. It's not for those who want to get rich overnight. It's for those willing to put in the work, learn, and be patient. And the best part is, they leave a lasting mark. A building, an apartment, a neighborhood. These are things that endure over time, even through generations. If treasury bonds are the anchor that keeps my financial ship from being swept away, then real estate is the sail propelling me forward. Each asset I choose plays a distinct role. And this journey of building an alternative asset system to the bank, is far from over. Come with me as we dive into the third asset class, the place where big companies reward those bold enough to invest early. Once I had established a solid foundation with government bonds, my shield against the stormy market fluctuations, and began building a passive income machine with real estate, I started to realize that there was still something missing. A final anchor. A place to store value when everything else starts to falter. And I found it buried deep in history among civilizations that had long since faded. The ultimate store of value, gold. In the modern financial world, where money can be printed with the click of a button, gold, this rare and precious metal, remains the timeless symbol of real value. It can't be printed, it can't be created out of thin air. And in 2025, as the world struggles with the aftermath of prolonged inflation, the price of gold surged past $3,000 an ounce, a milestone many once deemed impossible. But to me, this wasn't a surprise. It was the inevitable consequence. I had seen the signs long before. As central banks continued to loosen monetary policies and the dollar steadily lost its value, I knew that those without a safe haven would be the ones to pay the price. It reminded me of Ray Dalio's story, the founder of Bridgewater, one of the largest hedge funds in the world. He once said, "If you don't own gold, you know neither history nor economics." And I took that to heart. If you don't own gold, you're betting everything on a system that's constantly in flux. But not everyone needs to bury gold bars in a vault like something out of a Hollywood film. There are many ways to approach gold today, and I've tried nearly all of them. For those who like the feeling of owning it for real, websites like APMEX and JM Bullion allow you to purchase physical gold, gold bars, coins, even collectible gold. Holding an ounce of 24K gold in your hand, heavy, cold, and gleaming, is a sensation that's hard to describe, as though you're holding a piece of eternity. However, for those who want flexibility and don't need to physically store the metal, gold ETFs like GLD or IU offer an incredibly convenient option. With just a few clicks, you can own a share of a gold-backed investment fund. No worries about theft, no need for insurance fees, and you don't have to build a bulletproof bunker in your backyard. What makes gold special isn't that it generates monthly profits. It doesn't. Gold doesn't pay dividends, it doesn't create cash flow, and it doesn't skyrocket in value like tech stocks. But it offers a quiet stability, like an old, trustworthy friend, not flashy, but always there when you need it most. I remember back during the 2008 financial crisis, when the stock market collapsed and homes were being foreclosed left and right. Gold held its value. Or during the COVID-19 pandemic, when panic ensued and the government pumped trillions of dollars into the economy, gold once again became the safe haven. It doesn't make you rich quickly, but it lets me sleep at night. One person I've always admired in the financial world is Michael Saylor, the CEO of MicroStrategy, famous for investing billions into Bitcoin. But before he entered the world of digital currency, he had owned a substantial amount of gold as part of his strategy to preserve wealth against the declining purchasing power of the dollar. At that time, he referred to gold as a store of trust, a place where people could place their hopes when modern financial systems started to crack. For me, investing in gold isn't about fear, it's about taking control. I don't invest just to get rich. I invest to have the freedom to choose how I live, even when the world outside is in chaos. And you know, whether you're preparing for retirement or a father wanting to leave a solid foundation for your children, holding some of your wealth in gold is a decision that will never go out of style. Like the ancient Jews, like the Wall Street traders, or like the civilizations that once flourished, they all believed in gold, and time has proven them right. I often tell my friends, don't buy gold because you think it will increase in price. Buy gold because you know that at some point, everything else will depreciate. In a world where every value can be diluted, gold is the essence that remains unchanged. Now, when I look back at the path I've walked, starting from bonds, moving to real estate, and now gold, I don't see myself trying to get rich quickly. I see myself building a system of assets that can withstand any storm. But the journey doesn't stop there. There's still one more asset to explore, one that Americans always mention when they talk about growth and opportunity, the stock market. And that's where I'll be heading next, a place where not only value is preserved, but where one can break through and explode with potential if you know how to choose wisely. As soon as I thought I had built a solid financial framework, bonds for defense, real estate to generate passive income, and gold to preserve value, a new door opened. A world that was both strange and captivating, where value was not measured in monthly income, but in emotion, art, and rarity. The world of collectibles, luxury items, and rare memorabilia entered my life as a completely different kind of investment, yet one that was undeniably fascinating. At first, I was skeptical. Who would spend hundreds of thousands of dollars just to own an old watch or a pair of limited edition sneakers? But the more I delved into it, the more I realized that these items were not just material possessions. They were symbols of stories, of history, and most importantly, they were unique. In a world where everything can be replicated, rarity and irreplaceability are the purest forms of wealth. Take, for example, a Patek Philippe watch, a brand that entrepreneurs like Warren Buffett and Elon Musk have in their personal collections. These watches are not merely fashion accessories. They're a testament to craftsmanship and timelessness. One particular Patek watch was sold at auction for over $30 million. Not because of diamonds or gold, but because of its history, rarity, and the irreplaceable skill behind its creation. Or consider classic cars. I once had the opportunity to see a Ferrari 250 GTO, an iconic car so sought after by collectors that its value is almost immeasurable. In 2018, one sold for $70 million. And the odd thing is, the more people wanted to buy it, the less the owner was willing to sell. It was precisely this limited availability that drove its value. I then began to explore other areas: contemporary art, limited edition LEGO sets, and even Nike sneakers collaborating with famous artists. These items, which might seem like mere collectibles, quietly gain value over the years. I remember a conversation I had with a friend who lives in New York. He had invested through Rally, a platform that allows you to own a share of high-value collectibles, from original superhero comic books to vintage sports cars. With a small investment, he was able to co-own pieces that, until then, only the ultra-wealthy could afford. Another platform, Masterworks, opened the door for art enthusiasts who couldn't spend millions on a painting. You could invest in works by Banksy or Basquiat and profit from their appreciation over time. What I learned from these examples is that aesthetics don't just beautify life. They can also enrich it if you understand them deeply enough. However, unlike stocks, which can be sold in an instant, or gold, which is easily liquidated, the collectibles market is not as liquid. You need patience, passion, and knowledge. This is not a place for those looking for quick profits. It's the domain of those who truly love beauty, history, and have the ability to see the future in small, seemingly insignificant things. I once listened to the story of Virgil Abloh, the creative director of Louis Vuitton and founder of Off-White. Before becoming famous, he was a seasoned designer and sneaker collector. The shoes he designed didn't just have commercial value. They became cultural icons, sought after worldwide. After his death, the value of his creation skyrocketed, a testament to the power of creativity and personal legacy. I learned that every item in the world of collectibles is a part of story. And if you choose wisely, the right time, the right item, and the right way to preserve it, it can become not just an asset, but an appreciating work of art. Now, in my investment portfolio, alongside stocks and charts, there's an antique watch I bought from a small auction house in Chicago. It's not something I plan to sell, but just by looking at it every morning, I feel like I'm holding a piece of history, and that's a feeling that cannot be replaced. For those looking to start this journey, my advice is, don't follow the crowd. Choose an area you truly love. It could be art, classic cars, or even sports trading cards. Because only when you have true passion will you have the patience to wait for real value to emerge. I believe that wealth is not just about the numbers in your bank account. It's about the depth of experience, the ability to appreciate beauty, and understanding that some things, once lost, will never come back. And as I continue on my investment journey, I'm not seeking absolute certainty. I'm seeking diversity, a portfolio that can protect, grow, and inspire. And that's why I believe collectibles are not just a financial investment, but an emotional one. The next step in this journey. I'll tell you about the place where legendary investors like Peter Lynch and John Bogle made their names. The stock market, where bold ideas are turned into real assets. As I sat down to reflect on the financial strategies that have brought stability to my life, a question unexpectedly surfaced in my mind. Am I truly prepared for the unforeseeable? For crises, for events no one can predict, moments when financial systems might collapse, and all we have left is our freedom and control. It's in those moments that physical cash becomes a lifeline. This isn't something I often consider when browsing stock indexes or listening to interest rate negotiations. But one thing is certain: when everything changes in an instant, cash is the one thing that gives you a sense of security. In today's world, where we live off electronic transactions, credit cards, and mobile banking apps, we tend to forget a simple truth. When the system breaks down, those tools might be worthless. Physical cash is not an investment vehicle. It's a survival tool in times of crisis. Susie Orman, the renowned financial expert, once emphasized that each of us should have enough cash to cover at least 1 to 2 months of living expenses in case of an emergency. It could be a major storm that disrupts transportation and banking systems, or something as simple as a network outage making all transactions impossible. In those moments, physical cash is the only thing you can rely on to keep life moving. A clear example of this is someone like Jeff Bezos, the founder of Amazon. Despite owning one of the largest e-commerce empires in the world, Bezos has always kept a significant cash reserve to ensure flexibility in emergencies. That reserve helped him navigate multiple crises without worrying about liquidity or supply chain disruptions. This isn't about living in fear. It's about recognizing that when everything can shift overnight, having a solid financial cushion is essential. Don't wait until disaster strikes to scramble for temporary solutions or loans. When I began to truly grasp the importance of cash in my life, I remembered something from the height of the COVID-19 pandemic. The people who had cash on hand were the ones who managed to maintain a sense of normalcy when the economy came to a halt. Banks shut down, online payment systems went offline, and those who relied solely on credit cards faced immense difficulties. But those who had even a modest amount of cash, they had peace of mind. Just imagine a day when you can't withdraw money from an ATM, your credit card stops working, and no store accepts mobile payments. Cash becomes your salvation, your foundation for financial freedom, and your ability to act in the face of uncertainty. That's why I made the decision to always keep a meaningful amount of cash on hand, enough to cover several months of essentials. Let me share a story from the business world. Howard Schultz, the former CEO of Starbucks, once faced a major financial crisis during his career. In the 2008 financial meltdown, Schultz maintained a disciplined cash reserve strategy that not only helped Starbucks survive, but allowed it to thrive in the years that followed. Decisions like that are more than just lessons in personal finance. They're lessons in preparedness for the unpredictable. When I think about the freedom that cash provides, I realize that it gives me control over my life when all paths seem blocked. You don't have to race against time or to depend on fragile external systems. With cash in hand, you maintain financial independence, and you can choose what's best for you and your family in the darkest moments. Cash isn't meant to generate profits in the long term, but it's an essential foundation for stability when life hits you hard, when other forms of investment become inaccessible. It's like a shield that protects you, giving you strength to weather the storm without panicking about how to make ends meet. And now, I want you to think about your own future. Are you ready to face any emergency life may throw at you? Do you have enough physical cash to protect your freedom when it matters most? Think about that and make a decision today. Start building true financial security now before it's too late. We'll continue exploring other strategies on this journey as I share with you the assets that can help you build sustainable and safe financial growth, not just in emergencies, but in everyday life. When I reflect on my financial journey, one thing has become clear. Money doesn't just come from a paycheck or traditional investments. Sometimes, real wealth comes from building something of your own, something no one could take away from you. It comes from creating a stream of income that flows into your life continuously, without depending on any employer or company. That's how I began to see the value of owning my own business, not just as a means to financial independence, but as a way to reshape my life on my own terms. The idea of building my own business was something I had heard many times before, but it wasn't until I dug deeper that I truly understood its significance. We live in a world filled with opportunities to create assets from our creativity and commitment. You don't need massive capital or a giant network to begin. You can start with what you have and what you know. An ebook, an online service, a YouTube channel, even a small shop on Etsy or Shopify. Each of these could be a foundation for building your own assets. Of course, I can't help but think of people like Elon Musk, the founder of Tesla and SpaceX, who revolutionized both the auto industry and space exploration. He didn't start with vast wealth, but he had a vision, and he dared to build from the ground up. From those early electric cars to the ambitious space projects, Elon Musk has shown the world that creativity and persistence can turn the impossible into reality. Another example is Sara Blakely, the founder of Spanx, the iconic shapewear brand. She started with nothing but a small idea and $5,000 in savings, and went on to build a billion-dollar empire. Sarah's true wealth isn't just in the products she created. It's in the freedom she gained by owning and leading her business. When I began to understand the potential of building a personal business, I stopped seeing it merely as a money-making tool. It became a gateway to real freedom. I could choose the work I love, define how I do it, and earn income proactively rather than waiting on someone else's timeline. More than that, my business became a space for growth, learning, and evolution. But as anyone who has done it knows, building a business isn't easy. It's not a path without risks. Every decision could lead to success or failure, and without a clear strategy, it's easy to lose your way in a maze of opportunities and challenges. Still, the most important thing is this. You have to embrace risk and believe in your own ability. You must create a concrete plan, define your goals clearly, and pursue them step by step. A prime example is Mark Zuckerberg, the founder of Facebook. What began as a small project for Harvard students evolved into a global platform, and it wasn't by accident. Zuckerberg had a clear strategy for growth and expansion. He didn't just create a product, he redefined how we connect and communicate online. His creativity, decisiveness, and ability to manage risk turned Facebook into one of the largest companies in the world. It proves that while risk is inevitable, with the right strategy, your chances of success increase dramatically. In that same way, I've realized that building a business of my own offers far greater potential returns than simply putting money in the bank or relying on traditional investments. Banks might give you a small interest rate, but a business, if you nurture it right, can generate income with no upper limit. I'm not saying starting a business is simple, but it's a path that can truly give you control over your finances and over your life. You get to decide when you work, who you work with, and how much you earn. That freedom isn't just financial. It opens doors to personal growth in every direction. Whether it's a product you design or a service you provide, every step you take is an opportunity to prove yourself and to reshape your life. Building your own business is a powerful chance to change your life. It brings financial freedom, but it also demands clarity, resilience, and strategic thinking. When you're ready to face the challenge, your wealth won't just be numbers in a bank account. It will be the life you build for yourself, a life you control, a life you can be proud of. Life is changing every single day, and with each shift, we're given a new opportunity to adapt, to grow, to unlock potential we never knew we had. Digital assets are one of the clearest examples of this transformation. While traditional finance remains firmly rooted in old rules and systems, cryptocurrency has emerged like a fresh wave, offering chances we once only dreamed about. Cryptocurrency, especially Bitcoin, has sparked a revolution in the way we understand money. Unlike traditional currencies that are controlled by governments and central banks, crypto is decentralized. It isn't tied to any financial institution. That gives it a kind of power that can't be ignored. You've probably heard of Bitcoin, the first cryptocurrency ever created with a fixed supply of just 21 million coins. That scarcity is what gives Bitcoin its true value. If you look back at Bitcoin's journey over the past decade, one fact becomes undeniable. The returns it has generated have outperformed nearly every other form of investment. From its early days, when one Bitcoin was worth just a few cents, to where it stands today, it has seen a staggering increase in value, becoming a symbol of innovation and financial possibility. Many people have become millionaires, some even billionaires, because they had the foresight to invest in crypto early on. What's fascinating is you don't need thousands of dollars to get started. Platforms like Coinbase and Cash App allow you to buy Bitcoin with as little as $1. That means anyone can participate, whether they have a small amount to invest or a significant sum. But it's important to understand, crypto isn't without risk. It's a highly volatile market, prone to sharp swings in value. However, if you arm yourself with knowledge and a clear strategy, those risks can turn into opportunities for serious financial growth. You might be thinking, this market is way too risky. But here's the thing. Despite the volatility, cryptocurrency plays a crucial role in protecting your wealth from inflation, an issue that nearly every global economy is grappling with. That's why giants like BlackRock, the world's largest asset manager in El Salvador, the first country to recognize Bitcoin as legal tender, have embraced crypto as a powerful financial instrument capable of countering the devaluation of traditional currencies. Take El Salvador, for example. The country boldly integrated Bitcoin into its national financial system, allowing citizens to use it to pay for goods and services. This move not only provided people with a new way to make transactions, but also marked a strategic step in pulling the country out of debt and runaway inflation. Stories like these prove one thing clearly. Cryptocurrency isn't a passing trend. It's a real part of the future of global finance. And then there's BlackRock. With its deep understanding of the global financial landscape, it didn't just accept crypto, it actively stepped into the space. For BlackRock, cryptocurrency is more than an investment vehicle. It's a way to help investors shield their wealth from the instability of traditional markets. The endorsement of industry leaders like this reinforces the legitimacy of crypto. It's no longer just a speculative gamble. It's a high-potential investment. So what does this mean for you? It means cryptocurrency is your chance to step into a new kind of market, one where your ability to generate income is no longer restricted by the limitations of the old financial system. It offers you a more open, self-directed space where you're in control of your assets, not the banks, not the government. And with the rapid development of blockchain technology, transactions have never been more secure or transparent. Still, before you dive into the world of crypto, make sure you understand what you're getting into. Do your research, educate yourself, build a solid strategy to minimize your risk. Remember, in every market, whether traditional or modern, knowledge and preparation are the keys to success. Looking ahead, I believe cryptocurrency will continue to play a pivotal role in reshaping the global financial system. This is your opportunity to ride the wave of change, not only to protect your assets, but to create steady income in today's digital economy. By truly understanding and harnessing the full potential of cryptocurrency, you're not just investing in a new asset class, you're investing in your future. Looking back, we've just explored a long and transformative journey, one that reveals 7 powerful assets that can reshape your financial future. Without a doubt, protecting your wealth from systemic risks is one of the most critical advantages you cannot afford to ignore. In a world full of uncertainty, unexpected threats like financial crises or market collapses can wipe out everything you've built in an instant. To shield yourself, you must diversify your assets. Relying on a single source is no longer safe. Assets like real estate, cryptocurrency, or ownership in self-built businesses can serve as strong fortresses, standing firm against the chaos of economic upheaval. Building passive income is one of the most effective ways not only to achieve financial security, but to unlock financial freedom. Through rental properties, cryptocurrency, or equity in your own business, you can create a steady income stream without grinding away day after day. This is how you take back financial control, not depending on anyone else or any single job. It's exactly what successful entrepreneurs like Elon Musk or Jeff Bezos have done. They didn't just build empires from the assets they owned. They created automated income flows that made financial worries a thing of the past. And if you're still wondering why these assets matter so much, long-term growth is a compelling reason. Real estate, cryptocurrency, and business ventures all have the potential to yield massive returns over time. Take Bitcoin, for example. Those who invested in it during its earliest days, when it was worth only a few dollars, have now witnessed their gains multiply thousands of times. Many of them are not just millionaires today, they are pioneers in the new digital financial frontier. In short, creating a diversified portfolio doesn't just protect your wealth. It lays the foundation for stable and lasting passive income. Each of these assets offers specific advantages, from weathering financial storms to empowering you to live a life of independence and freedom. Remember, it's your flexibility, your willingness to choose wisely and invest consistently, that holds the key to not just surviving, but thriving in today's financial world. So let me leave you with a quote I believe is profoundly important. The world has changed. Saving like we used to can cost you dearly. That's right. If you cling to old ways of thinking while everything around you evolves, you'll struggle to build wealth and protect what you already have. Now, here's the question I want to leave with you. Where will you begin to build your financial future? And on a scale from 1 to 10, how valuable did you find this video for your financial planning journey? Leave your thoughts in the comments below. I read every single one of them. Your feedback helps me keep creating content that supports you on this path toward financial strength and freedom. And always remember, wealth isn't just money. It's what you build with wise decisions and persistent action. Start today.